Typically with short-term financing, the interest rates are higher than conventional lending like mortgages. Is that because the lender is taking more risk?
So if they're lending to a limited company, they will take a personal guarantee on the individual that controls that company.
Hello everyone and welcome back to another episode of The Way of Wealth with myself Prajesh and my co-host Mohammed. And we've got a new guest for you guys today. James, welcome.
Nice to meet you both.
Welcome.
We've already met.
We've already met. Yeah, we've met. We've met plenty of times.
Exactly.
Good to see you both, is what I mean.
Good to see you. We can't get rid of this guy, to be honest. Keeps bothering us in the kitchen.
Yeah, we have so much banter.
Why don't you tell us a bit more about yourself and what you do, James?
Sure. So I run a commercial finance brokerage called Taps Capital. We specialise in short-term financing, commercial financing, everything that isn't your conventional mortgage. A particular specialty is bridging finance.
What is bridging?
Bridging finance isn't actually the financing of a bridge. I worked with a colleague for 3 months in a finance brokerage who, for the first 3 months, genuinely thought it was an infrastructure financing company that financed the building of bridges. It actually comes from the idea that you're bridging the gap. So if you're buying a house, you found your dream home, but you're having to sell your house and it hasn't quite sold yet, it's a short-term finance facility that enables you to buy the property that you want to buy whilst you go to sell your other property. And it's short-term, typically up to 12 months, relatively expensive, but it happens quickly. And that's the driver. Since that idea, it's expanded to multiple uses. People that want access to short-term cash from their portfolio, people that want to buy and refurbish and sell a property that's uninhabitable. So yeah, we do all sorts.
But James, could it be used to finance a bridge build?
It actually could. Yeah. Depends how quick the construction team is. If they're super quick and they can get it done in under 12 months, then I don't see why not.
Yeah, if they're looking for short-term financing.
Exactly.
There you go.
So
Typically with short-term financing, the interest rates are higher than conventional lending like mortgages.
Yeah.
And that's because, is that because the lender is taking more risk with the financing?
I think it is. The mortgages typically take...
I thought you were just sharp, James.
Well, not all robbers wear balaclavas. But no, it is typically characterised by higher prices. Banks shy away from it. I think pre-2008, I think the last bank in the game was Lancashire Mortgage Corporation. I think when they became together, they shied away from bridging. I think Barclays may have owned a portion of it once and sort of got out of that. They weren't into anything short term. The default rate is much higher. If you are underwriting a deal and lending someone money in a matter of days, rather than taking weeks to understand the deal and the person, you're obviously going to have a few people that fall through the cracks. And you're going to have people that can't repay you within the 12-month time frame. So because of the risk of default and the consequences thereafter, it's typically priced a bit higher. Risk return.
And just on that default rate, when someone does default, does the lender, what's the lender security in case the borrower defaults? So
they typically do two things. So if they're lending to a limited company, they will take a personal guarantee on the individual that controls that company. If you're lending to an individual, by virtue of the fact that you're already lending to that individual, they are personally guaranteeing the loan. But the key security is the charge on the property.
Yeah.
Right.
So if they have a charge on the property, it effectively gives them power of sale in the event that they default on that agreement and they breach the conditions of that agreement.
Right,
Conditions of that agreement typically are repairs within 12 months. Don't let 20 people come and inhabit the property in bunk beds when you don't have an HMO license. Don't move your family into the property if it's an unregulated loan. So lots of caveats which will be within your agreement. If you breach those and the lender finds out, you get put into default. Comes with a punitive interest rate sometimes. That's their enforceability clause essentially.
Right.
Doesn't happen that often, but it does happen. I've been in the game 9 years now, and it is unfortunate. But from time to time, people do breach their conditions. They don't repay on time, it doesn't.
James, you're not just a broker though, are you? Because you lend your own money out.
We do a little bit of lending. We do. I think having been in the short-term finance industry for quite a while, and having my fingers burnt in stocks and shares, quite badly.
Tell us about
No. Before you tell us about that, but tell us about the when you lend out your own money as well.
Sure. So we do a bit of lending off balance sheet. We have a small funding line. If there's a particularly good opportunity where we can price for speed rather than pricing for risk, we have a pretty good team that can wrap things up very, very quickly, almost quicker than a lot of the lenders that we deal with. And so it acts as a good conduit to the business.
So it's a bad investment, right? Bad investment
What?
in lending out your own money.
It's a mixed bag. All in all, on aggregate, it's been a fairly good investment. There are the odd few loans where you rush it through very, very quickly, and you don't get repaid on time. And we've got a few problems at the moment, and they are the thorns in the side. And I've lost some money, but I've also made some money.
And he was complaining about stocks and shares. All right.
Yeah, that's a good segue. What happened? What's your story with the stocks?
Well,
and
I
shares?
thought, well, with lending, with lending on property, you can't lose all of your money because of the bricks and mortar value, and that was absolute nonsense. So I'll tell you the story about the shares first. There was a medical technology company based in Guildford, and an ex-colleague of mine went to school with one of the guys. He was the son of the chairman, and he was rabbiting on about this company for ages. And said it was a really, really good buy, and they're just about to get this FDA clearance. And I thought, well, this sounds really, really quite good. This sounds like an insider tip. And so I got a big commission in from a deal that I'd closed. I think I put 10 grand in. And every time I got a commission, I just kept lumping in. And the stock price was going up. I thought, well, this is fantastic. Any day now, they'll have the FDA clearance. It'll go 10x, and I'll be sailing off into the sunset.
Dude, that doesn't sound like you were investing in a stock that was listed on any stock market. That's a
weirdly
very high risk small company investment, right?
It was on AIM, and it still is on the AIM market.
Okay.
But I got a bit carried away. I thought, as soon as I get this FDA license, and funnily enough, they did get the FDA license. And it went from £1.28 to £1.60. And the following day, it went down to £1.50 and £1.40. And I thought, oh well, this is just some of the investors piling in and then liquidating and making. I thought it'll go back up, and it never did. And then the Russia-Ukraine war happened, and it went down, and it went down, and it got to 70 pence. I remember. I thought, no, it's going to go back up. If you cash out now, you only lose money when you cash out, and I'm in it for the long haul. And you know, it's trading.
Holding shares in it.
Yeah. So I bought £40,000 worth of stock at £1.28 average buy price. Guess what it's trading at today?
What is it?
Have a guess.
So you bought it at £1.28.
Is it half? 60p?
8 pence.
Like,
I've basically lost everything.
Nice.
Now I'm just holding it just for fun, because it's a story.
Are they paying dividends at least?
No, don't pay anything.
No, not on 8 pence.
No. The CEO's an idiot, and they haven't done anything exciting, and the shareholders just
So James, all right. You know, if you bought that within an ISA, okay.
Yes.
Your loss wouldn't be as bad as it potentially could be later on down the line.
Because I could offset the loss?
No, not because of that. Because when it does actually shoot back up, okay, and it hopefully will shoot back up, you're not going to have any tax on the gain. But let's say theoretically, all right, it did shoot back up, and you then was to cash it all in, you're going to have a CGT issue.
That's true. I think I've got some in an ISA. I think an ISA, a stocks and shares ISA, was set up for me by my dad, who, unbeknownst to me, was using my stocks and shares ISA for his own gain and benefit. But all of my losers are in the stocks and shares ISA, which is good because I've got my loss to offset. EasyJet, big loser post-COVID. I thought, well, it's a huge discount. This is a great time to get in.
How many companies have you got in your ISA?
Just the losers. Alibaba.
Who are the losers though?
Big losers.
Right.
So I won on Shell. Shell was a really good one. GlaxoSmithKline was a good one. But the big losers were the Hut Group, a guy called Matt Mulder.
Okay,
They do MyProtein. I thought, oh well, I buy this. It's really good, and you know, it's. And I read Motley Fool or Yahoo Finance, and it tipped it to be good because it's trading at a discount. I love a bargain. I don't like paying market value for a loaf of bread, let alone a stock or a share or a house. So I thought this is great value. And what happened? It went down.
So you got like 6 or 7 stock in your ISA, right?
Yeah.
Okay.
Chronic losers.
So me and Prajesh knows exactly what I'm thinking. All right, and the audience should also know me and Brajesh are probably like killing ourselves inside right now. Okay, so our clients, when we invest their monies in, have a guess in how many different companies they're actually invested in.
I'm guessing it's index funds, so it's thousands.
Not necessarily just index
Hundreds?
funds, but it's in the thousands.
Yeah.
Totally.
Yeah, yeah.
You're looking at average around 12,000 different companies.
Yeah.
Okay. So
You're investing, I'm gambling. So yeah, that's the big difference, right?
Guys, you can afford to gamble if you can afford to lose the money.
So James is super rich, so he can afford to
true.
lose. He can afford to lose all of that money. So it's not a problem.
Please
all
don't
right?
tell me you've invested in crypto yet, or have you?
I have. I
Okay.
have. But
Going
I got in
forward.
early. I got in quite early.
Okay.
2013 is when I got in. So I was quite lucky.
Bloody hell.
I bought in the dip in 2020, I think,
Yep,
just before.
okay.
So I'm not like super long. I don't, I'm not one of these people that sticks all of their money in and does the dollar cost averaging every week.
Sure.
But I've done well out of crypto. So I am I'm a big believer. Most people that haven't watched people like Michael Saylor will
Yep.
think, oh, it's internet funny money, it's a big bubble, it's about to collapse. And my old man, he used to harp on about Dutch tulips. Oh, in 1600s, there were these Dutch tulips and it was a big bubble. And in 2014, I begged him, it was £60 a Bitcoin, and we were on a ski holiday, and I begged him to put in £1,000. Begged him, and he wouldn't do it. He laughed and he said, it's a big bubble, it's about to pop any time.
Yeah.
And every 3 years, we've had the same conversation. And he's a naysayer, which is fair enough. He's into bricks and mortar. He does value stocks and all the rest of it. But he's always had an issue with crypto because he hasn't seen the fundamental value.
Yeah.
I think people now are, for several reasons. The first is that every single currency in the world
Yep.
has the ability to be devalued by the government of the day, overnight, who can simply turn on the money printers.
Yeah.
Yep.
Unless it's pegged to gold, none of them are anymore, Bretton Woods Agreement, all the rest of it. And so what asset class can you put it into that doesn't compel you to be a speculator, which can have a cross-border asset, which you can move anywhere. They can't take it from you unless they, pin you down and torture you and take your ledger off you and extort your.
So if the government isn't
seed phrase.
shafting you, then it's going to be a private corporation then, James.
No,
Okay.
it's decentralised. It's decentralised, and that's the point.
No, so this whole concept of even decentralization makes very little sense increasingly. And the only reason why I'm saying that is because largely the governments have, or tax authorities have complete oversight on what is happening with your crypto wallets, regardless. Okay. In terms of...
But just quickly, how
Yeah.
is that the case? Because from my understanding, if one
Yeah.
holds Bitcoin or Ethereum or any cryptocurrency, it's a anonymous holder through the blockchain.
Yeah, it is.
So how does the government have oversight?
So
on that?
when it comes to your wallets, okay, the wallets now, they have to share information with tax authorities in most developed economies around the world. How, if they didn't, okay,
Who has to? The
wallet.
decentralized network?
No, not the wallet, the exchanges.
The exchanges.
So you keep your money on an exchange, but of course, if I've built up my money on an exchange trading and I want to take it off into a cold wallet,
Yep.
that's mine. I don't have to share information with anybody.
no, they're gonna, when you end up liquidating from your wallet into your normal bank account, right? There's going to be an information sharing exchange happening at that particular point.
But as it matures as an
Yep.
asset class, and Joe Bloggs is prepared to accept
Yeah.
Bitcoin as payment for something that I'm giving him, that transaction doesn't have to be seen by anyone. And it's arguable that where did it happen? Where is the blockchain?
Yeah.
Where is that person domiciled? So it becomes a little bit murky. But I see what you're saying. Because
Yeah.
eventually, if there is this asset class everybody's pulled into that isn't very tax transparent,
Yep.
governments increasingly need to make more money on tax.
Yep.
And if this is happening, it becomes a problem. So they
Okay.
either create the downfall,
Yep.
or they create a system in which it becomes not decentralized, and they can tax it and they have complete transparency over it.
Sorry, James, this is quite new to me. All right. So what you're saying is, as long as it sits on the exchange, okay, and you've got a recipient who's willing to accept a direct feed, okay, from your exchange to their exchange, right, you don't need to go via a wallet.
You have a wallet on an exchange.
Exactly.
But depending on which jurisdiction you're in,
Yeah.
an event of you trigger capital gains tax by turning it from its asset into fiat
Exactly.
currency.
Exactly.
But if I send you 2 bitcoins now,
Yeah.
is there a tax due?
If you sent me 2 bitcoins now,
No money involved.
So if
there's no money involved.
Essentially, if James crystallizes a gain by
Yep.
sending you 2 Bitcoin because he purchased those 2 Bitcoin for a value much less.
Exactly. There'll
there
be a
gain?
crystallization event there. You would still have to declare that to HMRC, all right, and it would be a CGT event, and then I would get a certain amount, but you'd still have to pay tax on that amount.
But how?
What if it's a loan?
How does? We'll
All
come
right.
to that question in
All
a
right.
sec.
Yeah.
How does the government know that James has transferred Bitcoin to you because it's
All
happening?
right, frankly,
Sorry, that's
I
the
don't
question.
know. All right,
I do actually.
how
So-
HMRC knows.
We need a crypto
What I
expert in
can
this
say
podcast.
though, no, it's
No,
not
no,
even. It's
no.
not even about crypto experts. What it's about is HMRC has various different investigative powers and actually tools at their disposal, and heaven knows how they found out about a whole host of things that I've actually seen. Okay, I don't know, and we're not privy to know that. Okay, but
Yeah.
there's an unbelievable amount of legislation out there
course.
in relation to tax avoidance, evasion, sorry, okay, for very good reason. Okay, we can talk about the morality of that separately, whether we're being overtaxed or whatnot, but on this particular issue, particularly around cryptos, in terms of, all right, how are they going to know? Possibly you're right. Okay, back in the day, right, if you held property in India, Pakistan, or any other particular country around the world, and you sold that property, you're legally obliged to pay tax in the UK if you're a UK resident,
Yes.
right? Okay, but how on earth is HMRC going to know? The thing is, today we have something known as CRS, Common Reporting Standards. Tax revenues are talking to one another. If we've seen cryptos explode to the degree that they have been, okay, and you are a gambler, all right, crypto to me it shouldn't even be an asset class, all right, for a whole host of other multitude
Sounds like
of
someone that
reasons.
missed out.
I'm glad I missed out. All right, maybe you're not glad I missed out, but you know, the principle that I take, if you don't understand fully an investment asset class, you tend to avoid it.
This is what
Okay.
upsets me because nobody actually takes the time to try and understand it.
So, dude, I wrote 2 papers on this. Two
Okay.
papers.
You're an exception.
2 papers in 2022. It's on the website right now, particularly around blockchain. Just blockchain technology and the economic impact on blockchain. Among the things that I said was, look, all right, yes, I have a huge issue on fiat currency, okay, for its own reason, all right? And yes, I have issues in relation to government economic policy, with good reason, and I think most people will share those reservations with us anyway, okay? But imagine a scenario where you've got private enterprises, okay, mining cryptos, okay? You're mining Bitcoin, Ethereum, or whatever, okay? And these coins now have been popularized by TikTok and Instagram. So effectively, most of their value is in the brand, right? Which is what we see with Dogecoin, right? With Elon Musk pushing that up and pushing up any other coin that he's, you know, promoting, and many other.
How is gold so different? It's
Oh,
popularized
gold,
by people
no,
wearing
no,
it.
no. Gold is a bit different, okay? And I'm not an advocate of only investing in gold. Okay, gold has all of the volatility and none of the dividends.
Missed out on that as well. $3,200 an ounce as we speak.
This is the guy who said he lost X amount on stocks and shares with the seven shares that he
I'll
has
be the
around.
devil's advocate to everyone. Maintain a diversified portfolio with some cryptocurrency,
Absolutely.
some gold, mostly equities, and depending on your risk allocation,
100% right.
a mix
Rajesh.
between equity and fixed income.
100% right. But consider a scenario when you've got cryptos privately mined. Okay. Yes, you may be, or you will be disempowering the government. Whether the government will allow that even to happen is another issue. Okay. But you're empowering corporations or private individuals. Let's say you had the infrastructure to mine your own coins.
Right.
Okay, all right. There's very little stopping you from mining the coins that you need to run a currency, which is limited to your ability to have exposure to energy, right? So imagine oil companies, gas companies, right? They own or they have the infrastructure in place to literally dig the oil and run their generators. They could easily move away from their core purpose in generating energy to, you know, light our homes, to generating an energy to fund their new NVIDIA graphic cards and X, Y, and Z
I
to
see.
mine coins,
So
right?
it's a
You're talking
waste of
about
resources.
pivot.
It's a waste of
It's a
energy and a
waste
waste
of
of resources to
not
basically
just-
mine some magic coins.
No, I'm going a bit deeper. I'm talking about mercantilism. All right. So effectively, they're
Sorry, can you just clarify what
yeah. So
mercantilism?
all right. So basically,
I don't even know what that is.
all right. So basically, is the acquisition of wealth and not distributing it out elsewhere. So they will have immense power to create that wealth, to build that wealth, and hold it within themselves and not distribute it out.
To become a bank to a certain degree, but not lend or...
Well, bank is a bit different, man. Bank gets
No,
the
yeah.
authority to print money just for the sake of printing money. With the likes of Bitcoin, it's decentralized, okay, but it's less about this notion about decentralization. It's the fact that the government isn't involved in creating some type of token that is recognized between the parties in any type of transaction. Okay, if you're providing all of that agency to private individuals, what on earth could that impact be on national security, your own economic policy? It is way too dangerous to give that power to private individuals. Okay, it will just overpower corporatocracy to the nth degree. Having said that, though, I do think cryptos or this new age type of current currency that we're seeing, and we're seeing the Bank of England do the same, we're seeing European digital coins do the same, we're seeing a future of a US digital coin doing the same, and you've got this partnership in the US potentially happening with Bitcoin. Because I don't know if you've heard of the term stable coin,
Yeah,
because
USDT.
it backs essentially the stability of the underlying crypto that you end up holding. All of that, I think, is going to play an increasingly important role in this new economic future that we are totally navigating our way into.
Thank you for watching, and be sure to tune in for part 2.